Let's talk about costs that are included in inventory. Let me note this first. That's a T. Goods in transit. These are inventory items that we may have purchased and they're on their way. Are these costs included in our inventory on the balance sheet? It depends. It depends on our contract or agreement regarding shipping. If the title specifies FOB shipping point, title of the inventory passes to the purchaser when it gets put on the truck and leaves the supplier's warehouse. So before it even gets to us as the purchaser, we own it and it should be included in our inventory even if it's in transit. That is for FOB shipping point. If it's FOB destination, this means that the seller retains title and it stays in their inventory balance on their balance sheet until it arrives at the purchaser's destination. So if we were the purchaser and our contract specified FOB destination and these goods were in transit on December 31st, we would not include that in our inventory balance on the balance sheet. Let's talk about another one. How about consigned goods? If we have goods out on consignment, what does that mean? This is inventory that we own, but it is in the custody of, or in a retail store maybe, that is selling that inventory. So that location hasn't purchased the inventory, title has not transferred, and therefore, even though it's out of our possession, we've consigned it and it remains under our ownership and should be included on our balance sheet as inventory. Now let's think about the reverse. What if we are selling inventory that's been consigned by another company? Well, we don't own this inventory, and even though it might be in the warehouse and we could theoretically count it, we don't own it. So that inventory should not be included among our inventory on the balance sheet. Next, let's talk about this category product cost. We can just think about this as inventoriable costs, or costs that we are going to include in our cost of inventory. Product costs can include maybe shipping charges. Let's say we purchase inventory, the supplier also adds shipping charges, or we need to pay a common carrier directly. We're paying that to get the inventory here. We're going to include that in our cost of inventory. Some other common product costs. When we think about product cost, we really think about three categories. direct material, direct labor, and manufacturing overhead. Any costs that relate to the production or manufacturing of inventory should be included in the inventory cost. Stated another way, what I'm talking about is if we have a product that's in inventory, we want to essentially trap those costs in that product, keep them on the balance sheet until it's sold. So essentially, we are capitalizing these costs, and then when it's sold, it'll convert to an expense. Direct materials, the raw materials that actually go into the finished good. That's intuitive, easy to see. This one isn't as intuitive, but if we step into the shoes of the business owner, think about what this inventory actually costs you to manufacture. It's not just the raw materials. If you're paying direct laborers to assemble this or man the manufacturing equipment, that cost of labor is part of the cost of this inventory and should be included in such. Should be included, not expensed immediately, right? The third one is manufacturing overhead. These are costs in the factory, but they're not directly, easily traceable to the product. But we still need these costs to make the product. In other words, if we didn't incur these costs, we couldn't make the finished product. I'm talking about the production supervisor, like salary personnel in the factory. It's hard to tie that person's salary to the product like a direct laborer who gets paid an hourly wage and we know how long it takes them to make the product. Nonetheless, we need a production supervisor in the factory to oversee operations. We need lights, we need heat to make all the products that we're making. These are shared, common manufacturing costs that in some logical fashion we'll take a piece of these costs and assign or allocate them to inventory. So now we've got three types of product cost that we have housed in inventory and sitting in the warehouse on the balance sheet as they should be until they're sold. While I'm at it, let me just make a note of some costs that are not product costs to help differentiate this. And these are classified as period costs. Any costs that are not related to the factory, that are not involved in the production process, are considered period costs and are expensed in the period when they are incurred. I'm talking about marketing expenses, accounting, HR, corporate headquarters, anything outside of the factory, considered period costs and are expensed when incurred. Let's take a look at an example from the handout. This one's E81, inventoriable goods and costs. It says, presented below is a list of items that may or may not be reported as inventory in the company's December 31st balance sheet. Let's look at number one. Goods out on consignment at another company's store. We talked about consigned goods. These are products that we own. We have them in another store. They're going to sell them. They're still our inventory. So we're going to include that in inventory as of December 31st. Let's look at three. Goods purchased FOB shipping point that are in transit at December 31st. Goods we purchased, the terms are FOB shipping point. They're on the way, so they have shipped, and these are going to be included in our inventory at the end of the year. Number four, goods purchased FOB destination that are in transit on December 31st. Same situation, different terms. FOB destination, that's our destination, the purchaser's destination, And at the end of the year, the goods aren't here yet, so title has not transferred, and we wouldn't include this inventory cost in our inventory balance. 5, goods sold to another company for which our company has signed an agreement to repurchase them at a set price that covers all costs related to inventory. This is a repurchase agreement. And if you think about it, you and I have come to an agreement and I'm going to sell you this, but then I'm going to turn around and repurchase it. This should not be classified as a sale. And that inventory cost should remain as part of our inventory. 6, goods sold where large returns are predictable. These are goods that have been sold. That's the key. It's not part of our inventory. That's cost of goods sold. 7, goods sold FOB shipping point that are in transit at December 31st. These are goods we sold. We shipped them. That terms are FOB shipping point. We sold them. They're in transit, FOB shipping point. They're no longer part of our inventory. They're going to be classified as cost of goods sold, not part of our inventory. 8, freight charges on goods purchased. Yeah, that's part of the cost of inventory, and we will include that. Number 9, interest costs incurred for inventories that are routinely manufactured. In other words, we've borrowed money to purchase raw materials or whatever it is to manufacture this product. There's interest cost associated with this borrowed money. These interest costs are not included as the cost of inventory. Now, if we were building a factory and incurred interest costs, that's a different story. 10, costs incurred to advertise goods held for resale. That's an advertising expense. That's not part of inventory. 11, materials on hand that haven't been placed into production or manufacturing yet. These are direct materials, raw materials. They're not finished goods inventory, but nonetheless, they are a type of inventory and we should include it as such in the balance sheet. 12, office supplies. Office. That's not inventory. We're not going to include that in the cost of inventory. 13, raw materials on which a manufacturing firm has started production but hasn't completed the process. It's work in process. That is a type of inventory and should be included on our balance sheet. 14, factory supplies, factory. This would be included as a cost of inventory. 15, goods held on consignment from another company. We've got them in our warehouse. We have them in our store, but it's not our inventory, and we would not include the cost of those goods in our inventory. 16, costs identified with units completed by a manufacturing firm but not yet sold. What a complicated way to say. These are our direct materials, direct labor, and manufacturing overhead. Cost we incurred to make this thing. This is inventory cost and should be included on our balance sheet. 17, goods sold FOB destination that are in transit at December 31st. Goods that we sold, but the terms are FOB destination. And as of the end of the year, they're still in transit. So this means that the cost of those goods still remains in our inventory as of the end of the year. Last, 18, short-term investments in stocks and bonds that are going to be resold in the future. These are current assets and not part of our inventory.